See. All right. I think we are live and we are ready to go in a few seconds here. So we'll start right at 10 a.m. Eastern time, 7 a.m. Pacific. Good morning, you guys. Hope you guys are doing well. All right. I think we are live and we are ready to go in a few seconds here. So we'll start right at 10 a.m. Eastern time. Okay. Let me go ahead and pause that. Okay. All right. So welcome TRT members. Welcome YouTube fans. Good morning. Good morning. If you are on YouTube, please like and subscribe to the channel so you can get notifications of updated videos, etc. And of course, you can also visit our community at therockTradingCode.com or just follow me at the _rock trading on Twitter. So, all right. Anyway, let's go ahead and get started. It is exactly 10 a.m. Eastern time. Here's your market update for August, the week of August 12th here, and I'll talk about the week ahead. Hope you guys had a great week, great trading week. If you were bearish this entire week, you probably missed out on left a lot of money on the table. The markets have, just obviously rallied this week off the CPI numbers that came in, as you know. So we'll go ahead and go through this presentation real quick, and then we'll jump into the chart. So market brushes off still elevated CPI, as you know. It's funny though, because on Tuesday I was like 8.5%, 8.5%, and it actually came true. So CPI year over year was 8.5 in July, less than expected as inflation pressures ease a bit, and this is why exactly the market rallied, right? We're in the situation where, we're coming off 9.1 last month CPI in July, and now we're 8.5. So there's this renewed, even more so, renewed optimism, right? That the bottom could be possibly in. You have big money coming into the market. You have, it's just FOMO right now, right? So the core CPI also cooled to 5.9%, and that came in on Wednesday as well, followed by pretty good data on Friday. As you guys know, yesterday was a wild day in the morning, very volatile in the morning when the consumer sentiment came in and it was actually beat expectations. So generally, the consumer sentiment doesn't move the market as much, but it definitely did on Friday morning, as you saw. Quick summary: the S&P 5 SPX closes 17% above the June low. The Qs also closes 22% above the June low, and also Dow Jones closes 14% above the June low. So obviously, everyone wants to know, is the bottom in? Is it time to start buying shares? Is it time to, go long in this situation? Well, we'll see. Let's go and take a look at more charts before we get into that. So I'm going to actually skip let's talk about the VIX first before we go anywhere. The VIX, as you know, if you follow me on Twitter, or if you're in TRT, I've been bearish up until, middle of last month. Okay. But once the VIX started breaking my chart, all right, now we're at under 20 on VIX, and looks like we're going to 18.5. That's the next support line. If that starts to happen, you're going to see more rally, right? But once the VIX starts breaking my charts, I knew it was time to flip the hat and go start, buying calls on the dips, okay? And that's what we've been doing in TRT for the last couple of weeks, and we've been making really, really good money. So hope you're not missing out on these gains as the market rallies. I'll talk about volume. I'll talk about all of that in a little bit. But here's a SPX line chart, dating back to pretty much the beginning of this year. If you look at this chart here, this moving average 200, okay? This is your moving average 200, and we are nearly there at about the 4,300 level. That's going to be one gigantic hurdle if we actually hit that moving average 200. Now, if you are, let's say you're late to this rally, I think you got a little bit of room left, because that seems to be a kind of a magnet going into the week ahead. If we look back to March, when we actually broke the SMA 200 on the daily, we actually broke through it a little bit, and it came back to retest as support, and then shot up another about almost 4 percentage 4% right after the testing of that moving average 200. So what we could see in the coming weeks is that testing of that moving average 200 and then falls back down and test that support, potentially support, and run towards that 4,500 mark if history repeats itself once again. So that's going to be something interesting to watch to see if we actually top out at the 4,500 mark on the SPX. All right. Upcoming earnings report this week is all about consumer discretionary. All right. Walmart, Home Depot is going to be big. We'll talk about that today. We'll talk about Target. These are pretty much your big earnings report, and they could, if they report like terrible results. Now, they all came out earlier, I believe June or May or June or July. They all said that they were lowering expectations or earning expectations for the year ahead. They already lowered their guidance. And the same thing that happened with Microsoft, Google, et cetera, and all your big Apple, et cetera, they all came out with lower guidance. And guess what? All those stocks are up. All right. If Walmart actually looks good enough in terms of their earnings that they report on Tuesday before the bell, then you can see Walmart run up, right? Same thing with Target, same thing with HD. So, but if they do report lower than expectations, what they were expecting, then you can see pretty much a damper on this rally, right? So those are things to watch this coming week. Last point here, there's no big economic events on no big data except the FOMC's minutes release on August 17th on Wednesday at 2 p.m. Eastern. That's going to be a volatile day, right? Generally speaking, if the minutes sound hawkish, okay, multiple rate hikes, et cetera, from Powell, then you'll see the markets pull back a little bit. But if it's nothing surprising, generally speaking, the minutes during the minutes meeting or the release, you're going to see the markets continue to move up, all right, unless something bad happens. Real quick, I'm going to show you guys the S&P 500 breadth here, above stocks moving above their 200-day average over on the daily chart. And we are at a historical point. And I mean that by, if you look at COVID, if you look at 2018 crash and recovery, we're here. About 44% of S&P 500 stocks have moved above their their SMA 200 line, okay? So this is coming off the June lows, and we're right at the cusp of a potential breakout. And as you saw in COVID, we went right through it and came back down to retest some support lines and blast through, okay? So that happened in COVID. I'm not saying this is going to be exactly like COVID, because we're obviously in a different kind of environment. We're in an inflationary environment. There's quantitative tightening, not easing. All right. Governments, well, actually, they're still printing money for Ukraine. They're still printing money for the Inflation Act, Reduction Act, whatever it is. But there's no easing on the markets. And Powell or the Feds have said that they're still pretty adamant about raising rates in September meeting. All right. So I think the market is kind of, for now, for the short time frame, they're brushing off that sentiment that it's going to be 75 or anything crazy, since the inflation has cooled, and the market is kind of expecting that the Feds are going to pivot and ease up on the rate hike. So that's what you have going on right now. 2018, this is where failure starts to happen. If we are to compare current situation to 2018, then yeah, it's possible the bottom is not in. There's going to be one more bottom or one more leg down before we start recovering. Or this could be a COVID situation where we just blasted on through to all-time highs. So that's what we're working with today. So, all right, with that being said, let's go ahead and start with the Qs. I'm going to go ahead and pop open this chart. Hope you guys are following. I'm going to start with the weekly, as you know. I'll start with the weekly, and then we'll move on to the daily and shorter time frames, so you guys can kind of figure, see where I'm coming from here. All right. So this purple line here is your point of control. All right, point of control on the weekly. We actually held that as support to this week, and we blasted through. All right, this apex here. All right. In addition to that, we actually closed, which is a big deal to me, you guys. Even though I understand that there is lower volume On the weekly chart here, you have declining volume. That's going to be a concern, of course. Okay. Anytime you have stocks running up like we have been on declining volume, there could be some major correction that could happen. All right. But we're moving, but you look at at least this week's candlestick, and it's really bullish, right? It's a nice weekly hammer, held support at the point of control at the lows at 316. We closed above the EMA 50, this black line here, or this cloud. We closed right above that. Okay. And so we're at this point where, anything can happen. We can come back down and test the support at 307, or we can continue to move up. On declining volumes, obviously, it's going to be of concern. If we start looking back here, all right, held a weekly EMA. This is the EMA 200 line, all right, this blue line here, and we bounced perfectly off that, and we're continuing to move up on the Qs on the weekly. Pretty amazing run. Now, with that being said, caution to the viewers that we are once again overbought on the weekly, and we haven't been this overbought on the weekly since this time frame, since we hit the top of the bull run back in December, where Q topped out. Or I'm sorry, November 15th week, we topped out about the 408 area. So you can see that this area right here looks like it's coming up. Okay, so is it time to flip on the bearish hat? Not quite yet. I don't think so. Definitely, I do see the markets continue to move up. However, be prepared that any bad news could send could send capitulation or a panic throughout the market. All right. So definitely I see that. All right. And so certainly if you follow us, I use a CCI as well. The CCI is over 177. So it is extremely overbought conditions throughout the markets. But what I've also learned throughout this time trading in this weird market, or this choppy market, is that overbought doesn't necessarily mean that, hey, tomorrow we're just going to crash down to new lows. That's certainly not likely. But you could start seeing some selling pressure at resistance coming up on the Qs. All right. So let's see what happens this week. I would be pleasantly surprised if we can actually close at above 328 going into this coming week. 328, if that magic number holds throughout the week, oh yeah, you have a weekly volume gap here, and the next supply zone is near the 360 levels. So if you are a trader, you have to understand, to play the trend. You can't stay bearish every single day and fold your hands and wait until the right moment to buy puts. We've done that. A lot of traders have been doing that, buying puts as the market is moving against them. And some folks are just being plain ignorant. Trade the direction of the day. All right. So let's go ahead and go to the daily chart. All right. We actually managed, this is what surprised me on Friday. We actually managed to close above the weekly EMA 200. All right. And we are literally at the daily VWAP. Okay. Close above the daily VWAP, this yellow line here across your screen. We actually achieved that. Looking into this volume gap, good Lord, you have your next sell zone or potential supply zone right where the SMA 200 is on the Qs, which would be 343. All right. So that's going to start acting like a magnet. If there is no bad news in the market, if there is even a slight glimmer of hope for Walmart, for Target, for HD, for Home Depot, you're going to start seeing moves, S&P and the Qs or the Nasdaq start moving toward their SMA 200 respective lines. Okay. So don't be too bearish going into the week. Now, I'm going to flip over to my regression channel. So we're looking at lower, smaller time frames. I generally look at the 2-hour time frame. We saw this dip down here. All right. And this is where all the bears started buying puts. And guess what happened? All right. Just blasted off. And now on the 2-hour, you got even kind of a cup and handle happening on the 2-hour charts. Okay. So the top of this channel, this coming week, there seems to be that notion here that we can potentially hit that 335 line. All right, let me pull out some trend lines here. Okay, so we could Monday, I could definitely see a little bit of dip under the 328 mark before we start heading towards that 335. And so I'm going to put that target there for this coming week, 335, and we got to cool down a little bit. Okay. So don't be so shocked that we start pulling back after that 335 mark on the Qs on the shorter time frame. All right. So with that being said, I'm going to hop over to SPY. We'll start once again on the weekly here. Closed well above the EMA 50 line. All right. The EMA 50 line, well above. Nice big old hammer. You're starting to see the 9 and 15 starting to cross, and certainly the 34 and 50. All right. Once these two EMA clouds starts to meet, okay, be careful, because the market is going to use that as support, and you're not going to be able, and I'm telling you, it's going to wipe out a lot of bears if your sentiment is still very bearish right now. But we'll see. I'm open to anything that's going to happen in the market, knowing fully well that, you know, anything can happen in the market. We are, of course, reaching that supply zone. This is an area right here where the market will start seeing some weakness here. All right. In this 430, above 435, 440 mark. This is an area of support and resistance. Okay. Either we're going to blast through, or we're going to hit a wall and come back down, retest, you know, possibly consolidate. All right, before moving up. A lot depends on, of course, going into September. You have the midterms elections coming up as well. September FOMC meeting meets late in September. So, you know, a lot's going to hinge upon that. Now, the market is obviously pricing it a 75 BPS, okay? 75 BPS. So even if they do a 75 BPS, hey, it's the market's already expecting that. So can't be too bearish too going into the FOMC meeting. All right, let's go ahead and go to the daily. Let's start moving into Tesla, Apple, etc. All right. SMA 200, once again, SMA 200, 432, guys, right there. SPY performed a lot better on Friday than the Qs, all right? 432, goodness, let's see where it goes. But you see on the SPY, you don't have terrible volume. Yes, it's low volume, guys, definitely, I understand that. You had higher volumes on this run here, definitely lower volumes. So I see the bear case. All right. I see the bear case. So look at this. All right. Declining volume. All right. So a lot of folks would put a lot of emphasis on that right now, that they're declining volumes. We must buy puts. And I'm just going to caution against that. The market can stay as, you know, as irrational as long as it wants to. Longer than you can remain solvent. I hope that makes sense for you guys. All right, SPY. So target for this week, I think we're going to see 430. Yeah, I think we're going to get rejected right about the 430 level before we start consolidating or potentially making a move back down to test the 421. But once again, we have FOMC minutes meeting. If nothing surprising, I'm telling you, the market is really resilient right now. All right. So that's the S&P 500. Okay. Tesla. All right. Tesla, 6 straight red days. And all of a sudden, the bears got caught with their pants down. All right. Nice daily hammer moving back towards that SMA 200. Once again, about the 908 level. Actually closed at 904 after hours on Friday. But look at this. Look at this weekly chart. I mean, do you guys see this heavy consolidation in this area? All right, on the Tesla weekly. And can you really say, looking at Tesla, that this is a bearish chart? This is a gigantic consolidation area under the 1300s or 1200. Okay, pretty big range, obviously, but this is a big old bull flag, if you want to ask me. If you kind of zoom in here, you got a cup and handle type of situation right here. If Tesla continues to hold this 850, 830 range, yeah, you're going to see a movement back towards 1,000. It's itching to move back over to 1,000 here. So, and that can come pretty quickly if it starts gathering some steam. All right. So I wouldn't be too bearish on Tesla. I know there's a lot of Tesla bears out there, but right now, look at this daily cup and handle action here. Nothing to be bearish about when it comes to Tesla, and you have pretty decent volume on Friday. All right. Now, of course, we have to talk about Apple, right? Apple is, if Apple goes, then Apple takes the market down, all right? 172.10 closing on Apple, all right? You have a slight gap here. If you guys look at the chart on a daily, dating back to April 7th, April timeframe, you have a gap up to 174.30, all right? So I would say that we're going to see this gap fill at some point this coming week. 174.30 is my upside targets before a pullback. All right. We are literally, guys, the all-time highs on Apple's 182, 183. We're $10 away, 10 points away from Apple breaking that all-time high. Look at the weekly chart, guys. Look at this weekly chart. How can you be bearish here? All right. Yes, there are healthy pullbacks, consolidation areas. There's going to be, all right, pullback possibly below 168, et cetera. Maybe retesting this volume shelf here on the weekly. All right. Maybe, but nothing to be bearish about quite yet. Look at the candle structure there. Okay. Now, of course, you still have to be, mindful of your oscillators, right? Your oscillators and your STO is approaching oversold territory, or I'm sorry, overbought territory. All right, it's kind of like right here. We're back in all-time highs in December. All right, right around this area, we're starting to get overbought. All right, and look where we are now. All right, so this is going to be an interesting week ahead for sure. I definitely think it's going to be an interesting week ahead. And like I said, any bad news, I think we'll dump really quick. But no bad news is actually good news in this type of market. So that's Apple for you on the weekly. All right. So that's let's see, any other tickers that I'm missing here. Okay, so let's talk about Walmart real quick, going into earnings coming up in on Tuesday before open. So if you are brand new to the market, that means if you're going to play Walmart options, you're going to have to buy Walmart Monday afternoon or Monday morning and hold it overnight. We have a gigantic gap here on Walmart. All right. If you remember back in late July, they lowered guidance, right? After hours. And that just ruined the market run, right? That ruined the market run and everything started dipping. All right. Total gap down here. We filled this gap. I didn't even realize this in early August. Okay. First week of August, we filled that gap. All right. Came back down. All right. Markets dipped, obviously. And we're back here at the 133 area. All right. Walmart, as I mentioned, already said they're not expecting great earnings. And this is the type of situation where if they actually report something decent, good enough, right? Remember, this is a good enough type of market. Bad news is good news, right? Look at what happened with Rivian this week, right? Look at what happened to Upstart. Upstart missed their earnings like they are literally the worst company when it comes to earnings last week. And the market actually didn't take down Upstart. Can you imagine that? Now look at this behemoth of a company, Walmart, right? Even if they report decent news that they are in line with their bad expectations, guess what's the market going to do, right? Now, I'm not saying, hey, it's going to fill that gap overnight, 146, but we know Walmart, I mean, a staple in this country, if it can gap down like this, it can gap up like that. Okay. So if you are in TRT, I'm going to make a run for it. I'm going to do I'm not going to do anything crazy, maybe a 150 call. Just kidding. I think a 135 call. Okay. Something's, in close to ITM or close into the money. And see what happens. I really don't think Walmart's going to gap down again here with Walmart. So that's kind of my upside is 130, 135 target for Walmart. Okay, speaking of targets, all right, look at Target. It is actually in the gap fill zone all the way up to 209. That is a potentially 32 points move, or 37, whatever, from where we are right now. It is steadily climbing into the zone, okay? So when it comes to this chart, now we know that Target has to move their inventory. They have excess inventory. They put everything on sale like a lot of retailers did, okay? But all that is past. That news is done with, right? So I'm going to place calls. Target reports Wednesday morning. All right. Wednesday morning before the bell. So you have to buy some plays, or you want to buy some calls on this, all right, go with me if you want. All right, probably do a 175 call. Maybe catch a dip on Monday and do a 175 call and run it up on Tuesday, Wednesday. We'll see what happens with the market. All right, so that's your kind of your market update for this coming week ahead. I've given you my targets. Let's go ahead and go to the chat and see what's happening. What do you think about the Q gap? Okay, so let's go. All right, so what do I think about the Q gap? Yes, gaps have to be filled. All right, definitely not going to deny that. We have a pretty hefty gap right about, let's say, the 322 level down to the 318 level. So there's going to be that gap there. All right, I know there's a lot of veteran technical guys that are calling for this downturn into fill that gap. I couldn't agree more. All right. When is it going to happen? It is everyone's guess. Okay. A lot of folks have said we're going to see lower 300s. Okay. This week. And guess what happened? Right. So when this will happen, we don't know. I would say that if this is going to happen, there has to be some bad news that comes out from Walmart, from Target, terrible earnings, okay, across the retail sector, entirely possible, then we'll see that gap filled. But if there's no bad news, okay, that gap can stay there for a while, okay? I'm fully aware that there's a gap in NASDAQ, the NASDAQ chart as well, fully aware that there's there's SPY gaps as well. When do they get filled? Everyone's guess, okay? But going into this week, we don't have a ton of bad data or heavy data coming out except the retail, or unless the Fed starts talking on this week and tries to bring down the market. We don't know. All right. Okay, so let's talk about Netflix here. All right. Yeah, Netflix. Whew. All right, gap fill territory. All right, definitely some resistance here, right? The 250 mark. All right, it's already run up significantly. You do have a gap down here as well, but yeah, everybody's chasing this gap up to 331 at this point. Okay, if the markets continue to do well, look at how many gaps the Netflix chart have. I'm not saying that we're going to move back to 500 anytime soon, but certainly this would be an interesting area to see this gap fill. Now, if you look at everything across the board, right, we do need some type of correction coming up, right? I mean, you look at this daily chart, Netflix has been overbought since July 20th. Now, if you're a bear, okay, and you've been a bear since July and you keep buying Netflix puts, even though it says it's overbought, you're getting screwed, right? You're getting absolutely annihilated, all right? You still got to follow the price action. Overbought doesn't mean we're going to dump. It just means we're overbought. But the strength of Netflix and the strength of the Qs, the strength of the SPYs, they're all still there, all right? But again, be cautious, be nimble, right? You play your call in that direction, you take your profits, you go home, cash out at the end of the day, go into the next morning, fully cash. All right. And of course, some folks are buying puts. I totally get it. All right. That's however you want to read the charts, however you guys want to play the puts, go ahead. But I'm saying that the market has such a momentum right now. It cannot be ignored. All right. Okay. Buy XRT XRT. I mean, XRT is the retail ETF, right? XRT. All right. Yeah, you could do this. Cheaper way to go about it. Certainly. Look at that. Look at that beautiful chart. Right. Everything's just kind of moving up here. And again, I'll refer back to this chart here. Okay. It's anyone's guess at this point where this is. Are we going to follow the 2018 trend? All right. Where we hit this area where we are right now and fall back down for one more leg down? Or are we just going to rip skies like we did in COVID? Okay. I'm split. For me personally, I'm split between these two scenarios. All right, we'll have to see. But this certainly is looking pretty positive on the long-term side. All right. Okay, so let's go to let's see. I'm gonna let you guys unmute yourself if anyone wants to actually let's see, mute all, unmute all, yes. Okay, anyone wants to speak, you guys can go ahead and unmute yourself. Let me go over to YouTube and see what's going on with you guys. Okay, all right, thanks for everything. Yep, no problem. IW and Google, Amazon. Yeah. Okay. Let's talk about Google and Amazon. I mean, most of the charts are pretty similar, right, guys? I mean, you look at Google approaching that SMA, I'm sorry, EMA 200 line once again here. Okay. Point of control, a point of control, well, we're already past the point of control. Daily VWAP is right here at the 124 mark. Okay. Market continues to go, then boom. Okay. Triple bottom, quadruple bottom bounce. Look at that. That's pretty terrific. If you look at Amazon, pretty much the same chart, isn't it? Now, this is pretty dangerous, right, for Amazon. I know they gapped up on earnings. If you guys played the earnings call, we did earnings like 1,000% gain on that, I think here. Yes, you do have a gap down to the 123. All right, 123. You better pray if you're a bull that that gap doesn't get filled on you. However, a lot of writing on this week, right? Once is if the consumer discretionaries do well, I think you're going to continue to see this market rally upwards. I'm not seeing for the moment, all right, that this gap filling in the next several weeks. Okay, the market's just pretty resilient at this point. All right, Meta, ELEK, yeah. Hey, I've been tweeting, I've been investing in ELEK, Electros Inc. for the last couple of weeks here. Since mid-July, I started buying shares in this area about 8 pennies, 9 pennies, and started consolidating. But then boom. A 90% run yesterday on high volume. Okay. So, this is something that I'm holding long term, you guys. They're coming out with their low range EV vehicles coming out probably later this year or next year. They're getting their certification from Department of Transportation, and they're also launching their Tesla rentals in Miami. So I really like this company. I really like the prospect of this. So personally, if you didn't buy here, guys, I wouldn't go chasing this. All right. I'm up 95% on my investment in one day, which is good. I sold some around 19 pennies, but look for some a new area of consolidation before you go in and jump into Elect. I don't want you guys to go crazy with Elect because it's 18 pennies and you buy 100,000 and that's it's about $1,800, right? So careful with that. All right. All right. Okay. All right. Let's see. Let's go to the questions. Anybody in our TRT group, feel free to ask questions here. Question about Lucid. All right. Let's take a look at Lucid. Man, Lucid it's just going to hang out the $17, $18 mark for a while, right? It's kind of breaking down on this trend here, obviously. I definitely like to see more positive news come out of Lucid. They're missing revenue estimates, they're missing vehicle deliveries, and it's a problem for Lucid right now. I haven't even got my Lucid yet. So personally, myself, I've been tracking them down, and my vehicle is still not delivered because I got the Grand Touring Edition, and I still haven't got the vehicle delivered yet. So we'll see. Whenever it comes, it comes. Not too worried about it. However, it's consolidating. Look at this heavy consolidation area, right? Right about the $17, $18 level. And of course, this area, right? It's kind of danger zone, right? So you have support here. And it's just going to flip flop around here until some good news to move it up, or Tesla continues to move up. If Tesla starts breaking 1,000, you're going to see Lucid move. Okay. This is obviously a cheaper alternative to plain Tesla. All right. Thank you for addressing Aapl. No problem. All right. So once again, you guys, I think that's good enough for this update here. Once again, this is the biggest thing that I'm watching this coming week is this chart here. All right. This is your daily S&P 500 200-day moving average. If we look at the weekly, okay, looks pretty similar. Looks this area is just critical, right? 44%. All right. Either we're going to act like this, or we're going to retrace potentially. All right. Maybe we get up to the 50%, 50% area right above here before pulling back and then skyrocketing once again. So this is something that I'm watching very, very closely this coming week. Once again, you have FOMC meeting minutes going into Wednesday morning at 2 p.m. Eastern. No other big data releases, and we'll just also have to watch the earnings coming up. Once again, Walmart HD going into Tuesday morning, and of course, the big one, also a big one, the target on Wednesday, Wednesday morning as well. All right. Okay, guys. All right, gentlemen, ladies and gentlemen, I think I'm done here. This is your market update. If you are not part of the TRT community, you can visit therockTradingCo.com and join us there. If you're looking for daily educational videos, community, and, you know, trading by yourself is kind of boring. So why not join the community? All right, guys. So with that, I think I'm done for the day here. Have a great weekend, and I'll see you soon.